shakalaka, one of the worst years ever for investors. In fact, the last time this happened, the US government defaulted on its gold peg. Today's video, we're going to be taking a look at a lot of very interesting charts, including why things may be turning around for Bitcoin. You'll definitely want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video we have a very interesting one. As a matter of fact, we have a massive Bitcoin breakout bearing down on us within 48 hours. But we're also going to be talking about how bad of a year this has been for investors and why things appear like they are turning around for Bitcoin. Before we get into it, guys, make sure to like, subscribe, click the notification bell. Come join us over on Twitter at the Crypto Love, where we share all the best charts in Bitcoin and cryptocurrencies. Push the like button and let's get into it. Right now, Extreme Fear 23. We've just been hovering between 20 and 24 for like the last year, it feels like. The overall market down 1% today. Bitcoin at 19,273, Ethereum at 1302, BNB at 271, XRP 46 cents, Cardano 35 cents, Solana $29, and Dogecoin 5 cents. And if we take a look right now, Bitcoin has had support since the last week in September. This nice white trend line right here, very good support. And we have had a much larger downtrend, this blue line right here, that is basically forming a nice wedge for Bitcoin right here, set to break out by Friday, October 21st. We will either have a breakout up, which would be pretty bullish for Bitcoin, or a breakout down, where we would continue in this blue wedge we've been in for months until the breakout about the 5th of November. So, definitely something very telling will be happening for Bitcoin in the near future. But if we take a look at the markets overall, this year has been devastating for the S&P 500 and just about every other asset class out there as well. We've witnessed the lowest number of green days since the 1950s. If you are alive today, this is like the worst market you could have ever seen. As a matter of fact, the last time the U.S. markets faced a drawdown of this magnitude, the U.S. government defaulted upon its gold peg within the next 24 months. This only has been this bad two other times. 1933 with the Executive Order 6102 and 1971 with the Nixon shock. So, that being said, I would say right now people are pretty pessimistic about the markets in general. Pretty bearish about the markets in general. As a matter of fact, the tech put to call ratio is moving average is now at the highest level it's ever been seen. That's the most people ever are betting on the markets going down and putting their money behind that bet, saying the market's going to go down. Now, it could go down. There's no way to tell that it can't. But we might also have a massive unwinding not too far away. Now this, if the market goes down, it could be a massive unwinding because the whole world economy falls apart. But if it goes up, it'll be a massive unwinding because huge gains for anybody betting against this right here. As a matter of fact, if we take a look at the tech versus S&P 500 relative price, who's your bet on? S&P or tech? Well, based on this, these two times we had nice turnarounds for tech. Potentially, now might be the time to bet on tech, like cryptocurrencies, like Bitcoin, things like that, but not financial advice. Clearly, if we take a look at the Bitcoin chart right now, the 2-month chart is oversold RSI plus no price movement. We have bottom dojis looking like this. Basically, between the start and the close, there is nothing. It basically just moves sideways, no selling pressure. We believe it's just a matter of time and noise before we see another sharp price increase. The previous times on the 2-month candles, we've had these flat bottom dojis were the bottom in 2019, the bottom in 2015, the bottom in 2011, 2012. Every time after that, look at the run-ups that have happened in the price. If we take a look at this chart right here, the bottom already in. According to the disparity index, in past cycles, each time Bitcoin price was 55% below the 12 MA, the bottom was in. We see the 12 MA right here. Will this time be different? We can see touching this 55% line right there. Every time it happened previously, the bottom was in. This was suggesting the bottom was in June, July when we touched that bottom. Not only that, but the Bitcoin accumulation with RVI signal, the relative vigor index, demonstrates similar accumulation signals for Bitcoin's entry. The third bottom in RVI has touched support. Now, previously we had 1, 2, 3, and then look at what happened with Bitcoin price. Again, we had 1, 2, 3, and look at what happened with Bitcoin price. Now we've had 1, 2, 3, and, well, we'll kind of have to wait and see how this thing pans out over the next few months. Right now, we have very, very high upside risk, which means that the price is much more likely to go up than it is to go down. If we take a look at the NUPL, the net unrealized profit and loss chart up here, now when it's touching the top in this green zone, this is high downside risk. It means it's very likely for Bitcoin price to go down. As we saw, all those areas were price peaks in Bitcoin. Now if we take a look again at the NUPL on the bottom side of it, this is high upside risk, much higher chance of the price going up. Now if we take a look at previous times it was in this area, this was the exact bottoms, suggesting that we're much more likely to go up than to go down. As a matter of fact, Bitcoin could just be repeating itself almost perfectly. We have previously cycle peak 380 days, 45% drop for 180 days, and then right around the time before halving, massive explosion. Well, same thing happening again. We had 500 days here after the cycle peak. We had 45% down. And right now we are just counting how long this trough lasts for. Right now we're at 132 days. Potentially same distance between now and the halving could explode afterwards. So if we want to take a look at the one chart that could indicate the bottom is in, well, first, this is how you find tops, by looking at the very short-term holder hodl waves. This is 1 to 3 months, 1 month to 1 week, 1 day to 1 week, and less than 1 day hodl waves. So all of these hodl waves are less than 3 months. And we can see they correlate very closely with the tops. When new buyers get in and it rolls over, that is a top. Well, coincidentally, we can also take a look at the hodl waves to find the bottom. And this is more of the long-term holder hodl waves. This is 6 months to 12 months, 1 year to 2 years, 2 to 3, 3 to 5, 5 to 7, 7 to 10, and 10 plus. And each time this has rolled over, the bottom has already been in. As of right now, hasn't rolled over yet, but it is almost historically high. The only time it's been higher was back here in 2015. So things could be looking good. Things could be turning around for Bitcoin. Maybe, even though 2022 was a rough year, 2023 might be a better one. So that's all for today's video. If you enjoyed it, push the like button. Helps out so much. I'll catch you guys later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.